Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's January 25th. This will be our chart lesson for the day, and you can see today's. You can see the support that we had down here. This is the daily chart. Somebody will always ask me what these bands are. This is our envelope strategy, so I always try to mention that because if not, I'll get a couple of emails and people asking me what that is. But this is our envelope strategy that we use, and we use this mostly on the daily chart, although it can be used on intraday charts as well. But I normally only use it on the daily chart just to see when prices are getting oversold or overbought long term, and kind of looking at the turning points longer term. Obviously, it was another crazy day, but the red bar here is today's price action. This is into the overnight. That it's a little late when I'm doing this today. And you can see it looked like we were going to get some rejection and maybe rally out of here. But this inside bar is not a good sign. That prices are retesting that low again, which is not uncommon. But that's certainly not rejection off the support that's going to lead you to think, hey, we're about to rally out of here. So are we just going to test the support until we can break through it? Or are we going to get a failed break lower and then reverse? Or will we build some base here and then finally bounce out of here? We'll just have to see. But this is not rejection. So this is not a good sign for prices rallying on out of here yet. So we did rally a little bit off the lows, but this is still a huge down day. And again, this was, I'm not sure how many points were in this move here. It's another 130 point day. So, I mean, these are crazy. I mean, this was a 200 point day down and a 200 point day back up, which is very unusual. This whole sell-off is unusual compared to what we've seen over the past year. So there's just a lot of negativity out there for the market right now, and we may be about to roll over into a bear market. It's just hard to say. I would respect this support, but I'm not really to say, hey, based on what we're seeing here, that we're going to bounce out of here yet. So just be careful. Obviously, as you get into the intraday chart, let's go back over to our 2002. Obviously, you want to base most of your trades off of what this is telling you. That daily chart is just to kind of get a look to see what we can expect over the coming days. And right now, you know, I don't see us bouncing strongly. I mean, it could happen, but you know, the chart's just really not telling us that. So it's really hard to know what's going. It looks like that looks like acceptance of prices at that level, with down here with strong support there as well. So it may take a while to work through there, or if we test it enough times and we can't get through, it'll reverse. But it's certainly not rejection and doesn't look like we're going to rally yet. That's my point. So hopefully that's clear. Now this was another crazy day, and you know, we're down. Actually, we got three measured legs here. We didn't quite make a measured leg on that last one. You can see there's a little bit of space in there. But there's three legs down, which normally leads to, let's try that again. Just see how big that gap is. It doesn't look very big, but it's probably bigger than it looks. Well, I must have grabbed the wrong thing. I thought I grabbed the ruler there. Did I? Forget it. It's not that important. We didn't quite make the low, and then we rallied out of there. We really had two competing channels on the way down. We had the blue channel, but we also had the green inside of it. You can see prices found support off the blue channel and couldn't get down to the low of the green. And then we pretty much, I'm sorry, as soon as I start talking, this crazy leftover cough from my COVID starts bothering me, and I'll have to probably pause occasionally and clear my throat. I apologize, but it's just, I mean, people have told me these things last for weeks, and I've been hacking for 3 weeks now, and I feel fine. I just have this leftover cough, and they tell me that's pretty common. So to be prepared for it to last 3 to 4 weeks. So we'll see. It's getting better, but when I start talking a lot, that's when it tends to bother me. So didn't mean to. I need to move through this quickly because it's late and there's a lot of trades here. And actually, for all this price action, there's not a lot of good trades. I marked a lot of green ones. and I skip it. So eventually I just started skipping them because there's just so many green ones, and it just wasn't a really good trading day. These quick reversals, and if you didn't catch, I mean, there's some trades in here. We'll get to them, but it's not like you would expect. But anyway, we had these two competing against each other, and notice that we came up short that far on the green, and then we overshot it that much up here, which is common because of market geometry and equal moves and so forth. And I didn't measure these two, but I'm guessing they're real close. One leg up and then your second leg up. And you can see that's where we found that resistance. Prices broke higher, probably because of this short, came up short that much here. We actually got a close outside this green channel on the way up, moved to a new high, and then we just started working sideways. It looked like we were going to head lower, and we just got stuck in this. Um, and we finally broke out and made a second leg up. And actually, we made quite a bit more in the second leg up. But you measure this leg, and then start from the low points. That would have been a great target. And you can see we had some sell-off right there, and that's probably why, because some traders are looking at that target area. Plus, there's a little resistance there from earlier. Prices correct a minute, and then there's still more buying coming, and off it goes. And only to see it eventually sell off and pretty much take it all back again at the close. But now we've taken almost all the, or at least half or 2/3 of that big move back in the overnight. So who knows what's coming? Just trade safely. When you get into these pink areas, don't be afraid just to sit tight and do nothing. But even on the reversals, there's not a lot of good reversals. And I want to say this because it's on my mind, because it's been a bunch of people sending me emails and posting in the forum. Look, reversals are very advanced, and you need to be a pretty good chart reader, fairly decent, and you need to have a good bit of experience. There's a reason I don't teach those early on, because all they'll do is slow you down and confuse you. Stick to the basics and the easy stuff, and you'll have so much more success. The idea is not to take a lot of trades. The idea is to make money. I've said that a few times lately. And but people just, they want to, and then somebody will say, well, I want to add another trade to my trading scabbard. That's not the goal. You only need one or two, tops 3 good trades a day to make bank at this. So you don't need to add extra trade. If you just come in here and trade second entries with the trend at the key entry point, no, you won't get a lot of trades, but you'll be surprised at how much success you'll have. But if you come in here and you start trying to trade reversals, and you start trying to, not picking on this trader, but something the trader said in there today, he based a failure or reversal on a hidden secondary. Don't do stuff like that. You're just overthinking and reaching, and you're just looking for trouble. And we got this down to a science. So don't try to add things or change things. There might be some minor things you can add that you picked up somewhere else, but usually it just slows you down and creates more trouble. So anyway, I'm already 8 minutes into this. It's late, and I've still got a bunch of trades to go through here. And so I'm going to move through these pretty quickly, because this was a long day with a lot of price action. And again, there's probably some here that you might argue for that might be green. If they were a good trade, I pretty much marked them. There were still some that I didn't mark at all, just because they were risky. Like right here, there's a clear second entry with a big bearish bar, but it's right back into that resistance, and you don't have much room there. Sure, it shot right through it, even shot right through the MA, and eventually bounced at the midline. But it could easily bounce there. And so, and as big as that bar is, 32 ticks, that's a huge risk to say, hey, the odds are if it breaks lower, and there may be plenty of ticks in there to get your scalp, but that's why I didn't mark it. So it's a trade you could argue for. It's probably green, and it's probably right at the borderline of being red, but I didn't mark it. And there's probably going to be some more like that. So just because I didn't mark a trade and you took it and you liked it, doesn't mean you're wrong or that I'm right or anything like that. So just make sure you understand, when you get a day like this with all these trades, I could sit here for hours and talk about this chart, and I just don't have time. So I'm only going to show you the really good ones, or the ones that are real close to being really good, that kind of thing. And unfortunately, we just can't go bar by bar on every chart every day, or I'd be here all day. So, but anyway, let's zoom in here, talk about the trades, and wrap this day up and see what tomorrow brings. But it's been crazy. 7 o'clock came right over here on this drop down. This is too congested. That's a nice move down, and you would expect prices to go lower, but you've already had a close outside and a new low. But getting another leg is not out of the question right there. And you can see this is working off that blue channel midline. And we tested it once and it didn't hold, but then we came back and tested it 2 more times. So the problem is it's congested looking and it's sideways, and we already have a new low in place. So it's not a high probability trade. It turns out to be a great move, but people will take that trade and it works, and they like it and want to know why I didn't mark it, because it's a high risk trade. Just because you see this big move after, and then tomorrow they'll take 2 or 3 just like that because they'll remember that, and every one of them will fail on them, and then they'll be, oh, now I understand. Don't wait to understand because of something negative happening to you. Just understand, if I don't mark it, there's something there I don't like. And generally, if you study your chart, you'll figure it out. So it's, in the big scheme of things, it's a first entry short, and you're better off to wait on the second entry. Got a new low there, it's a first entry. This trade would have been better than this one, because at least here you're getting a first entry and then that's got a higher low, so that's a second entry. Still not ideal because it's an inside bar, and inside bars with all that support right there are very unreliable. And you can see it would have worked, but it doesn't go very far, and on a day where the volatility is not so high, you probably would have had a loser there. With the volatility this high, you can take more chances. It's easier. That's the thing. It's so, if you just wait on second entries and decent setups, even if they fail, the moves are so big, it's easy to get 4 ticks. It's easier than normal. And I try to beat that into people's heads, and people don't quite get that. But anyway, we run down here, we make a new low. So now we've had a break of this. I don't have this one colored, but it's this blue channel working down through the blue lines, and it's inside the green one. And so you probably get a reversal. So if we bounce off this green, we may still try to test this blue, but if we don't, we might work higher back to the top of the green, and we might even work back to the blue. So the expectation here is there's a good chance we're going to go higher. So notice you get 2 legs up here. However, there's 2 legs in this leg, and that's pretty common. Technically, by the count, that's a first entry, second entry, third entry. So it's not a clear, but if you're a good chart reader, you can put these pieces together. But that's the thing that new traders don't need to be doing. Don't try to put these things together. But I talk about them because eventually you want to learn it, and there are traders in here that are advanced enough to understand that. But you newbies that aren't very good at reading the chart, listen and try to learn, but don't try to trade these unless you're just sim trading and you're all right with taking a loser and learning from it. But if you do, please don't send me an email and ask what you did wrong, because I get 100 emails a day asking the same questions from newbies that don't even understand a second entry. And I don't mind you asking me a question, but I just can't answer 100 emails a day for, because you don't even understand a second entry. So hopefully that's understood. I don't want people to think that you can't send me an email or you can't ask me questions, but I can only do so much in a day. And so just, unless you're really understanding price action and you had a loser and you can't figure it out, the idea for you is to study it and try to figure it out. And if you eventually can't, either I'd prefer you to go into the forum and ask. If you're not a premium member, you can join the forum for $10 a month, and you can go in there, you can get feedback and help, and it's much easier for me. I can answer them on my own time when I want, which I do that with email anyway, but I'm just overwhelmed with email. So hopefully most of you understand what I'm getting at here. So just be limited in your emails to me, and don't send them to me unless you really need to. But anyway, there's a first entry, and there's a leg up with a first entry, and then there's another leg up that has 2 legs in it, and that's common. Sometimes there's 2 legs in this one, 2 legs down, and then 2 legs back up. But the market tends to move in twos, And I can't, and that's super important. So waiting on second entries is part of the key. I see people take, well, this was a lower high. Well, you should have waited on the second entry, not a lower high. Yeah, there's sometimes a lower high is a great trade, but you better understand why, or if you take it and it loses, then you just misread it. There's not much to ask. Wait on the second entry because the market tends to move in twos. And so that's very basic that I felt like we had to go all the way back to the basics because I see experienced traders making that mistake. And that's just very basic. So even though this is the second leg up in a two-legged move, you could still see that as a second entry and a double top. And we're still looking for prices to make a new low. So you've had two legs of correction. Actually, we're not still looking for that, but you've had two legs of correction and you got another two legs of correction. So you'll the odds are you'll probably get a good, you might make another test of the low, but you should probably get a scalp out of this. You get a little bit more than that. I think there's 3 or 4 points in that move. It looks small, but like I explained earlier, when the volatility is this high, even if it's not going to be a good move, you're probably still going to get 4 ticks out of it. And it is a little congested, but you can see you're making higher highs and higher lows here on the second entry, and there's 2 legs up. And just in case somebody can't see that, there's a leg up. Let me try something different here. Let's just use our arrow here. There's a leg up. And then a second leg up. And within that leg, there's 1 leg up and a second leg up. And it finds strong resistance there and makes that double top basically. So I like that one to go short, especially since this is congestion because it's probably going to snap back, even if it only tests the lows, which that's what happens. And then what ends up happening here, we just get into a flat area. And you prefer to go short here, but I don't see any shorts I really like. You want to see triple test or double test or rejection. And you might say right here, hey, there's 1 test, 2 tests, 3 tests. But when this bar doesn't break lower, and you get 1, 2, 3, 4 bars really going sideways, and you got a 2-bar matching low, 2 or 3 of them have very tiny bodies or no bodies, that's not rejection of prices. So even if you get a triple test, it could fail on you. And it's exactly what it does. It turns down, traps in all these people trying to short right there, runs up, runs your stops, and then goes exactly where you thought it was going to go. Because this is not a great setup. But there's warnings there that, hey, prices are not getting rejected there. And then once they run everybody's stops, then you can see rejection right there. But it's tempting to go short on that big bar, but you don't want to go short way down here because it could tick 1 tick lower and turn back up again. And then it fails out the bottom. Actually, I don't think I talked about this one. Did I talk about that one? You got a 1, 2, 3 test, and you got a big bullish bar, and it does break lower first, and you still got room back to the EMA in the midline here. So I'd probably take that trade, especially after it trades all the way down and then breaks higher. So it's not a great trade though because it doesn't really reject right out of there. Now here's one that falls down and it breaks out, and you suddenly get rejection straight back up there. And you can see that reversal type bar way away from the EMA. I like taking you're better off to wait on a higher low, but you don't really get one here. You get a higher low here, but again, you're just going sideways and you're finding resistance into the midline. And that's how you determine if you want to trade through the midline. So I talked about this today in the forum. If prices are consistently coming off the highs and going to the lows, going back to the highs, back down to the lows, back up to the highs, back down to the lows, back up to the highs, then you're probably all right to trade into the midline. But if prices come down here and they find support right there, then be careful going short into that. Or if they come up here and they find all that resistance, then don't go long into that. I say that a lot. Don't go long into the middle of ranges. There's no true rule that says you can't go long, but be smart about it. Look, what is the price action telling you? If it's consistently running up and down from the highs to the lows, then don't worry about the midline or the EMA. But if it's coming down here and then running up and finding resistance like it does here, then be careful going long into the EMA or the midline. Right here, look, it bounces off the midline, bounces off the midline. Well, that's telling you right here, if you found a short right there, be careful going short into that midline. And look what happens, it bounces again. Sure, eventually it runs on down through, but you can't bank on that, so you'll just sit tight. But if it's consistently running up and down, up and down, up and down, then take the trades if you get a good setup. I mean, it's all about what the chart's telling you. And it's telling you something at all times. You just have to learn to see it and understand it. But I don't see anything in here I like anywhere. Nothing. Okay, I had a little interruption there. I had to take that call. I'm going to move real quickly through this because I've been working on this video hour and it's 21 minutes long and I'm not even we're not even at 9 o'clock yet. So I'm apologize, but I'm gonna buzz through this quickly. We went through this range. We failed out the top, then we came back underneath. We tried to go higher once, twice, 3 times. That's also a second entry short. Relatively bearish bar. I like going short there. It's a little congested, but if you see the triple test and the second entry short, and it's a big down. I mean, it's pretty much a big down day, and they've trapped everybody to the long side now. So there's a good chance we may make a measured leg down here. It comes back and looks like a bad decision, but it ends up dropping. And if you didn't enter here, by this time it's clearly congestion now, and you got a little more support there. I wouldn't enter there, even though it's very tempting. And it's a lower high, but it's not a very good signal bar either. So we drop on down. You get another second entry right here, which if that had been a good signal bar, I'd say take that. It's a triple test. It's a second entry short, but the signal bar is junk, so you just can't take it. The lower high is junk. There's a reversal here, but that's not how you want it set up. You want it to be off the EMA. It is off that key entry point, and it did break higher and turn down. So it's an engulfing bar, and that'd be the only way I'd take it. If you go short here, you're right into the lows, and you can see it doesn't go far before it starts doing this. Again, the volatility is so high, you probably could get out of it, but it's just not worth risking. And we're just going sideways again. You fell out the top. This is why you like to wait on it, even though that's not a very good signal. If there'd been a decent signal bar there and you go short, again, it's probably enough to get out, but it has another push higher, and that's why you usually want to wait on a lower high. And of course, this signal bar is horrible. If it breaks higher and turns and you trade it on the engulfing bar, maybe you take that trade, but I think you're better off to wait. And we're just dropping down, but there's no real good entries here, and you've already got a new low in place, so you want to be real choosy here now. There's a reversal here, but I don't really like this one either because technically it breaks lower right there. It's not a failure till it breaks higher, and that's right here. And you can just see all those bars across there, and they just keep going. So until finally they fell out the bottom, and you could look at that as a triple test and a failed break lower. So you might take that trade. Again, I marked it green. It's not the best setup, but hey, you're not getting many setups. So so far, that's probably as good as anything we've seen. Of course, and if you catch that, it's a great move. There's a failed second entry short here, but that doesn't set up properly. It's way too far away from the EMA. You see it doesn't go very far before it fails. Of course, on a high volatility day, it's enough to scalp out, but you don't want to start getting in the habit of taking trades like that because sometimes they won't get enough. We drop down here. There's another failure here, but you're right into this trend line, so you don't want to really be going long into that, and there's no short setups here. So it just keeps going sideways, and it finally breaks out and goes higher. Just going sideways again, fails out the top, runs down, and finally you get a pretty decent reversal here. Notice you run up, you get a first entry, you get a second leg up, and you get a second entry. It fails. You even get a good signal bar here. Again, this is into the blue, but we should have turned down from here. And this trend channel here is still in play, and that's the first break. So there's a good chance we're going to test that high again. If we hadn't shot out here, I'd tell you don't dare go long into that trend line. But because we've already pushed out and you've got a clear channel here, and that's the first break, with that, that's probably going to trap shorts. And you can see it does. Look how it rockets up. So you got a break, it runs up to a new high, and then you're trending down. And you get a pretty good reversal here. Notice working down, you get a first entry. Technically, there's a break higher right there, but that still looks all into one move, and then you try to go higher again right there at the EMA. I like that trade, and you can see it trapped people. Boom, it runs down. That's a sure sign that you trapped a bunch of people to the long side. And people that don't know how to read the chart don't realize that, hey, it's about time for a reversal. So there it is. Prices drop. And you just kind of go sideways. And we've seen a bunch of that. And you get these, and see, it looks like it's going to be a failed breakout. And then it pushes up again. There's really two legs of correction there. But there's that's a second. You could look at that as a second entry short. It is a second entry short. That's basically a double bottom. So first entry. Second entry, but the signal bar is no good. It's a lot of that. There's a failure here, but too far away from the EMA. Just a first entry here. By the time you get a lower high, it's right into this. You got this double bottom, and there's also, that was previous resistance across there, and now it's acting as support. Not a great place to go short, even because it's too far away from the EMA. And you just don't get a chance to enter this move back up to the highs. But you do get a big reversal here, and then you get a second entry short. But again, I don't like that one. The bar is so big, it's right into support. But when you get that failure, that's going to trap people, and look at it go. I don't know if I'd wait till down here. It's probably okay to go short here, but you're probably going to get a correction. So if you do want to do it way down here, let it break lower and maybe drop a limit order in and get a better entry. But on this one, because it's a trap and you're expecting prices to run back down and at least test these lows, you probably could enter that on the engulfing bar. You just have to be careful with engulfing bars. But runs back down, and then it reverses. No reversal pattern here. There's a great channel working up, but there's no entries. And again, I'm moving through this quickly. You get a break here, and you don't even get a retest, and we come down here, and prices actually push through the support. They did actually here too, and they keep trying to go higher, but you see the resistance that was support, and then finally it bounces. But I don't see any setup here. There's no real rejection, and once it goes higher, they start running the stops. And that's all that is stop running. That's not rejection here. They just finally pushed it higher enough they caught the stops, and people have to exit. And you get your first break here. I did look at this one like this is a double bottom, so you get a first entry and then a second entry. And the way this pushed down, it makes a little lower low there. If it breaks higher, there's a good chance it's going to take off. And at least you're going to get a scalp out of it. And you see it does that. And then it comes back and tests it again. But I wouldn't enter back again, even though it does run some more stops there. I wouldn't take it. And again, that's not a great setup. It's green. Drops down here. And then you get another huge move up. And you don't really get a good entry for it. You do get a close outside a new high here. And there's that resistance and that big bearish bar. Still way away from the EMA. I like that one. You don't really get a lower high here. Just drops on down. You get a break of this little channel. Again, this is like a first entry, second entry, third entry. And what happens is once you start going sideways like that, just don't even count anymore, because you'll just, I mean, there's a second entry right there. Of course, the signal bar is not any good, and you would have got stopped out only to see it go right where you think, and it's just too congested by this point. And prices break higher, turn down, and you can see this is why a lot of times you want to wait on that high or low, because that looks pretty good, fails. That looks pretty good, fails. And you're continuing to push lower, and if you wait till you get a higher low, then you got proof that, hey, we're going to try to make another leg up, and then you get that right there, although that's not a very good signal bar. And as you can see, just about every one of these trades would have still worked because the volatility is so high, but they're not good setups. And when the volatility goes down, those will all be losers. So I'm not marking them. And this you could look at as a triple test, but the signal bar is not very good. Then you get an inside bar. I did like this one. We push outside this resistance, and notice we tested it once, we tested it twice, we tested it 3 times, but no good signal bar. Then we tested it again, and it actually breaks lower and turns up. I like going long right there. I mean, really, I would count that as a triple test, but you could call that a quadruple test. And if prices test something enough, even though there's congestion there and they can't go, they're probably going to go the other way. And off it goes. And again, I don't know if I would wait till this bar right here. I probably would have gone in on the engulfing, but that's probably what you're going to get on days like this but it's 36 points because they're traps and they're running the stops of all this craziness. Off it goes. We come back up here and we just start going sideways. And again, I don't see anything. You don't want to be going short now because everything's pointing up, and I don't see any good longs in here. So we finally get a close outside, a couple of legs up to a new high. Come back first entry, second entry, third entry. So that's a third entry by the counts. But I marked this one. It's just a little failed break lower you might take. You really try to go lower once, twice. Really, I just call this once, twice. And this is like a third time on a little failed break lower. If there's room back to that EMA, you might take it because you see what happens. It gets a little resistance there. If this would have had a really good signal bar, you might have taken it, but this is just too neutral. And it runs on up, and then we're just going sideways again. And I don't see any real good setups. There's a failed break here, but that's too neutral. You don't really get a break lower there to call out a high or low. Runs on up. I'm just not seeing anything in here. First entry, there's a high or low there, but you got to go low and high or go long into the highs. You could call that a reversal, but it's so far away from the EMA. And then finally, you get a good reversal here. Notice the new high, first entry, and then second entry right at the EMA. And you could possibly, this is close, but just stretching a little bit, you might say, okay, that's a double top, first entry, second entry, and it's a breakout pullback. You could still call that a double test of the EMA and that big bearish bar. I like that one to go short. Two, if you didn't enter here. If you already in here, I don't think I would enter there. It would have stopped you out. You could re-enter right there, and you would have got a runner on the re-entry. That's kind of how it goes. And then we run down here, you get a break, and you just get a first entry there. You get a lower high here, but look at the congestion. It's too risky. No reversal, and that takes you into 230. So there just weren't a lot of really good trades today. There's some in there. They're spread out. There's a lot of green ones, and like I said, there's others you could argue for green. I was 30 minutes, and there weren't even a lot of trades, but there was a lot. I talked about a lot of good stuff that maybe will help some of you to become a better trader. And just remember, it's all about what the chart's saying. And just because a pattern, this is the biggest thing that I can't get across to people. We're not pattern traders. You'll see the same pattern, and and they'll say, well, why is this pattern okay here and it's not over here? But the context is 100% different. That's the difference. If you can't see the difference, then you got a lot of work to do. So just keep studying. But it's the context more than it's the pattern, and the patterns are secondary. We use the patterns to time our entry and enter it at the right location. But the chart has to tell you, hey, there's a good chance you might find an entry here, or a failure, or a reversal, or whatever. And most of you have no idea on failures or reversals. You're still working on the basics. So forget those for now. Just work on the basics. It'll be much easier. Yeah, you're not going to get as many trades, but the idea is to make money, not take trades. So anyway, we're almost 35 minutes. It's going to take this forever to process and get uploaded, and it's already 7 o'clock here. So I'm going to wrap it up. We'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.